So most of the things that I'm going to discuss by Sanjeev and Chamil as well, as these three subjects are interrelated. And this subject is, as you know, the financial statement analysis and valuation. The valuation component added last year, first time, and before that, financial statement analysis. So we don't have modeling, as Chamil said. In my subject, no modeling, only financial statement analysis and valuation. Right? Okay. When you read the subject, financial statement analysis, the first question is financial statement or financial statements. Right? It's a very basic question. Right? So whether there are different components in the financial statement, or it's a single report. Right? So normally when you refer financial statements, there are different components included under financial statements. Right? But the subject name is financial statement analysis. And when we refer financial statement analysis, when you refer the components of financial statements, there are different components. Very basic things, but this is for the benefits of non-finance professionals. When you refer financial statement, we refer income statement. Right? What is the name for income statement? P&L. What is the name for P&L?
The statement of significant matakane.
Yeah. Statement of comprehensive income. Right? So sometimes we refer income statement, sometimes we refer P&L, sometimes we refer the statement of comprehensive income. Right? So a lot of technical jargons are there in this subject. So that's why it's very difficult for you to understand what is communicated by finance team. Another example, equity. Right? Sanjay was talking about the valuation of equity. Another term for equity? Another technical term for equity?
Capital?
Shareholders capital, right?
Shareholders fund. So when we say equity, not only the capital plus reserves. There are retained profits plus sometimes other reserves like revaluation reserve. So the equity and shareholders fund, the same thing. What are the name for shareholders fund? Net assets. Another name for net assets? Huh? Net worth. So see, to explain the same thing, we use number of technical terms. So that's why you get confused. So in one occasion CFO says the shareholders fund, another occasion say net worth. Right? So therefore understanding these technical terms are also very important. Then you can use the same language to communicate to all the stakeholders. Right? So we are going to discuss all the technical terms used in accounting and finance. We took only one or two terms. Right? When we discuss this, we are going to discuss. So though the subject is financial statement, there are components of financial statements like income statement we discuss, and the balance sheet is there, the second report, and another name for balance sheet, financial position. Right? The same document, same report, sometimes you call balance sheet, sometimes we call the statement of financial position. Right? The second report is a component of financial statement. Third one, cash flow statement. Cash flow statement. And so for non-finance, there is a question why you have an income statement as well as a cash flow statement. Can't we substitute cash flow statement for the income statement or the income statement for the cash flow statement? Right? So those who have a financial background, they know, they understand this, right? The cash flow statement is a very important report. Most of the readers of the financial statements don't read cash flow statement. This is very, very important. There are a number of bankers in this class. When you evaluate a customer to give a credit facility, right, you need to look at the cash flows. Right. So sometime back, I think 2 or 3 batches before, there was a student head of IT from a pharmaceutical company. The first day itself, I had an informal chat just after the break or during the break. So he told me in Sinhala, so අපේ CFO කතා කරන්නේ billions වලින් petty cash bill එකක් දැම්මම reject කරනවා. So no money. Right? So he thought that the CFO is wrong. Right? Then I explained him, you need to understand the difference between profits and cash flows. Profit is one thing, the company is profitable, you earn 2 billion profit this year, but sometimes there can be situations where even you can't pay 10 rupee or 100 rupee petty cash bill. Sometimes. So if you understand finance, you don't raise this kind of questions. You understand what finance says. Right? So therefore it's very important to understand the cash flow statement. We are going to go through all these documents, all these reports, and we are going to go through an annual report also. And can you guess the number of pages in an annual report, roughly? Average annual report? Size of annual report these days?
34.
200 pages, not 30, 40. Right? So therefore, to read 200 document report, you need time to understand. So therefore, you need to read. And as I discussed at the beginning, the financial statements are prepared not for accountants. It's for the ordinary users like you, shareholders. Do you think that all the shareholders are accountants? No. The financial statements are prepared for the non-finance, mainly shareholders. Right? So accountants prepare it, but as they use technical terms, we think that the accounting is difficult. Accounting is not that difficult at all. We are going to discuss one annual report, and it's a kind of a team exercise, and we'll have groups, and in the group we'll discuss the annual report. Right? So when we discuss annual report, we need your interactions. So otherwise, what we'll do is, I just go through the annual report, and I'm also involved in a number of other activities. So CS Sri Lanka Annual Report Awards Committee, I am a sector expert, representing the banking sector. So therefore, most of the bank's annual report I have gone through. Right? Therefore, I don't need to go through it again. And also, I am involved in as well Chamber of Commerce Business Excellence Award. So there are also most of the big companies apply for this award. So at that time also, I go through the annual reports. Right? So we need to do this as a team. You need to read it from the beginning. And also, most of the readers read the income statement. The revenue how much, the profit how much, that's all. Lot of other valuable information is there. Right? So as there are a number of bankers, if you want to understand the borrowings of this organization, if it is a listed company, all the borrowings details are there in the annual report. And so you can see the amount borrowed, the interest rate, the security, everything is there. So if you are a branch manager, and if this customer is one of your customer, or if you think that this is a potential customer, don't you think that this information is useful for you? Useful. So you need to read it. And a lot of non-finance information is there. not like those days. We need to understand the strategy of the organization. So there is a separate review on the strategy of the organization. So you need to read it. You need to understand their strategy. And those days, the stable companies, the big companies, we look at the history and evaluate the performance without looking at their strategies. Right? The big companies like Airbnb, or the very good example is Zoom. Just before the pandemic, it was a very small company. Now you can see the size of the Zoom. Right? If you use historical information without looking at the strategies, without looking at the industry, what's happening there in the industry, what kind of technological developments are there, can you assess their performance? Can you forecast their performance? No. Right? So therefore, not like those days. Those days the environment is stable and no significant changes, and therefore you look at the history and you can forecast. But these days you have to be very careful. A lot of changes are happening even during COVID period. And even if you take Sri Lanka, how many challenges, how many changes are taking place even during these days? The importers can't import, and exporters can't retain their dollars in dollar account. The central bank convert them on 7th of February. The bankers know better than me. Right? They say it's mandatory conversion. Right? And if you want to send money to some other country, you have to wait for there are queues. And a lot of government regulations, restrictions are there. So sometime back fertilizer and chemical import banned. So those who are in this industry, so there is a huge impact to them. So we need to understand all those things to understand financial health of organization and the performance. Right? So therefore we need to understand, we need to read not only the revenue and profits, we need to read other areas also. And we discussed about the cash flow statement. There is another report in the financial statement, income statement, balance sheet, cash flow statement, one more. Changes in equity. Right? So if you use an alternative name, normally we call it statement of changes in equity. Right? So as we discussed number of terms for equity, net worth movement, net asset movement, shareholders fund movement, you can see from the statement of changes in equity. Right? And also there are notes to the financial statements. Notes to the financial statement. Those who manipulate the financial statement of a company, they use notes to manipulate the financial statement. Why? Most of the readers don't read the notes. They just look at the income statement and the balance sheet. So we are going to discuss one local case study, and this is Haley's NGT case, right, in 2010 or 7 or 10. And so at that time, the size of the manipulation of that company, 1 billion rupees. Right? So we are talking about corporate governance, we are talking about the reputation of the company, we are talking about the reputation of the directors, reputation of the management, despite all. So these kind of things are also happening, and you just do a Google search and find accounting manipulations in Sri Lanka. Can you find even a single manipulation? I don't think. Right? While doing this, you can do it. So as I do, if you raise a question, if I don't know the answer, what I say is I will answer after the break. So thereafter I will do a Google search and give you the answer. Right? The same way, if you do a Google search, it's very difficult to find accounting manipulation. But if you do a Google search for global accounting manipulations, you can find number of cases. Lehman Brothers, Merrill Lynch, then the WorldCom. So there are a number of cases, right? So it doesn't mean that in Sri Lanka no accounting manipulations. Lot of things are happening. So therefore, when you use financial statements to make decisions, you need to understand the credibility of the financial statement, right? So in the first subject, financial modeling, you use financial information from the income statement and the balance sheet. And even in financial management, you extract data. The main source of information for most of the calculations is the income statement and the balance sheet or the financial statement. So if the source is wrong, right, the output is also, we say, garbage in and yes. So therefore you need to ensure that you get the right set of accounts before analyzing and before using and before making it for your decision, right? And also when you get the financial statements, right, how do you assess the credibility of the financial statement? Any way to assess the credibility of the financial statement? As I told you, reputation of the company, yes. The reputed companies, they don't like to manipulate, they don't need to tarnish their image. And reputation of the directors, chairman and the CEO, top management is important. Any other thing?
What about the auditors?
Auditors, yes. Auditors report. And even if you are a non-finance person, you should be able to read and understand the auditor's report. Right? It's not rocket science. Right? So the opinion is very clear. You can read and understand. And also you need to understand different kind of auditor's opinion. Whether the audit opinion is modified, whether the audit opinion is adverse, whether the audit opinion is disclaimed, whether there is a clean opinion, true and fair view, or whether there is an emphasis of matter. Right? See how many technical terms that we use. Right? But all these are simple things, not difficult things. Right? All these are simple things. So if it is true and fair, in the opinion, you can see it's the financial statement. We can see the true and fair view of the financial statement of the organization. We can see the true performance and the true financial position from the financial statement. If it is true and fair, that's the best opinion that you can get. Right? So therefore, you need to read the auditor's opinion. And also, as I told you, you need to read the strategies. So there are reports on the strategies of the organization, but some of the sensitive information might not be there. But the most of the information, you can get an overall picture, what kind of direction the changes are taking place, you can understand. Right. So, learning objectives, understand the financial language and terminology. Right? We discuss only 2 technical terms. Right? Try to understand, try to remember. Right? So some of the technical terms you need to memorize. Why I say in different forums we use these terms. So therefore, it's easy for you to understand what finance communicate to you. What the things are communicated by the directors or the other stakeholders. Right? Understanding financial language and terminology. And how analyze financial information to assist in decision making. Right? You need to analyze financial statement and use them for decision making. And communicate more effectively with key stakeholders, including finance. So these are the overall objectives that we are going to achieve from the financial statement analysis. And understand financial language and terminology. Right? So read this. Understand how finance works within your organization can contribute both to the success of your organization and the success of your role within it. I explained this. And I talked to one of the head of IT or the IT person, I don't know the age there, from Sampath Bank during the break. a year, right? So we had a chat during the tea break, and so as an IT person, he prefers to buy the world best core banking solution for his company, business. He is representing, I think, Sampath Bank. Yes, Sampath Bank. Right. And you submit a proposal and get rejected. So then he thinks that they don't understand the importance of technology and other things, and they just rejected. No, we need to understand the reason why the proposal got rejected, right? And you need to understand when you make this kind of a decision. We were discussing during the break, right? The world best solution might not be the best solution for your organization, right? So I am going to put one of the state example. The Petroleum Corporation, they use SAP. And companies like Hemas, John Keys also use SAP software, right? And the utilization of that is better in the private sector than the state sector. So therefore, when you evaluate even a core banking solution or a ERP system, you need to understand the size of the organization. You need to understand the impact to your cash flows, right? So just before implementing a ERP system, you spend everything to acquire another company, and you borrowed a lot of money. In addition to that, if you try to implement a ERP system also, if the investment is very huge, it's not practical. It's not practical, right? So therefore, when you make this kind of a decision, you need to understand the impact to your cash flow. Can I afford this? If we don't have internally generated funds, as Sanjeev said, equity. So what are the alternatives available? We can borrow. Even for borrowings, different financing options available. Whether I am going to take a bank loan, or we are going to do a debenture issue, or whether we are going to use a lease facility, we need to decide. Right? And so, if we buy this core banking solution, right, can you guess the impact to the profitability and the cash flows? Can you assess? What's the direct impact to income statement? If you buy a core banking solution or ERP system, immediate impact, the income statement, P&L.
Is it depreciation?
Depreciation. So if you depreciate a software within 5 years or 6 years, and if you spend 1 billion, so 20% of 1 billion you immediately charge to income statement in the first year, right? And also you need to understand with your other financing plan whether we are going to do a rights issue next year. So will there be a negative impact of this decision on the rights issue, right? You need to understand, right? In isolation you can't make a decision. You just look at the core banking solution. It's a very good thing. I don't say it's bad, but we need to understand overall organization. So that's why we say all other functions need to understand finance, then only they can perform better. Right? And HR manager, I think Chamini was talking about restroom or some other thing. HR manager. Right? So when you recruit people, so sometimes you prefer to have the world best people, right? Again, you need to understand a lot of other things. Can I afford? Or whether our systems and processes are there to get the work from them. You recruit a person from a multinational company, and their systems and processes are in place, very easy. So for everything there is a SOP, and your business, no SOPs, no proper systems, and recruit a person from that kind of organization and put it there and ask him to perform. Can you think that the environment is conducive for him to perform? No. So therefore we need to consider a lot of things. So as I told you, immediate impact to income statement. If you acquire a ERP system like that, there will be hit to income statement, depreciation. You charge depreciation. That's a fixed cost. Next year, due to pandemic, no sales. Can you delay the depreciation? No, that's a fixed cost. And also, as you don't have internally generated funds, you use borrowings to finance this investment. So in addition to depreciation, you need to incur a fixed finance cost. Right? So there's a borrowing cost involved in this decision. So there will be again hit to the income statement directly. And can you get the maximum benefit within 1 year, first year, from this decision? Can you do the all cost savings, all productivity improvements, all revenue, the new product that you are going to introduce? No. Right? So therefore, even when you take this kind of a decision, you need to understand the overall picture. You have to have a better dialogues with the finance team. Right? So then only you can make effective decisions. Right? So therefore, you can help the organization, and also you can play a better role within your division. The success or failure of a business will depend on the choices made by people at all levels, and these choices will have implications for the finances of the organization. So as I told you, every one of you make decisions every day. Right. So all these decisions will have a direct financial impact to the well-being of the financial well-being of the organization. So therefore, you need to understand that. And an understanding of finance is also very helpful for you, your personal life. Charmin and Sanjeev, they were talking about this. And if you have grasp of the finances of the organization, and it will help you also to see whether savings can be made and why plans are sometimes shelved. So as you said, you submit a proposal and they reject. So you will understand the reason. So these are some of the things. And so important areas in the syllabus. As I told you, we start from very basics. Right? I learned this from Mr. Anthony Page, the former Cargill's Group chairman, and so he believes in the basics. If you put the basics in place, you can do other things. Right? So even to learn this subject, you should know the basics, the foundation. Without knowing accrual, can you understand finance? Accounting is difficult. Without knowing impairment provision, can you understand finance? It's difficult. There are a lot of bankers. Do you know how your impairment, the values are calculated, impairment provisions are calculated? It's technical, but try to understand. Right? So sometime back, I think in 2011, I was the CFO of a company, and at the AGM, one shareholder raised a question. How you calculate the impairment provision? That's in that year, first time IFRS implemented in Sri Lanka, and it's a new technical term also, impairment, and it's like bad debt provision and impairment provision, right? So he's anyway a difficult customer. Like you get different shareholders in forum and raise a lot of unwanted questions also, right? If there is 5,000 donations, so normally he asks to whom you pay this 5,000 also, right? So I explained him very clearly, right? So this is the impairment provision, and we group our portfolio as individually significant customers and the collective other the small loans. So two portfolios, and individual customers we do individual impairment. For the small customers, we use collective impairment. Right. So then I told him we are using net flow rate method to calculate the impairment provision. The first we calculate the probability of default. Thereafter we calculate the loss given default. And I explain very clearly, thereafter no question from that person. Right? So, but you need to understand, if you are a branch manager, you should know how your impairment provision is calculated. And also basic accounting principles. Right? So there is an accounting principle called prudence, right, which I am going to discuss in detail a little later. But just to understand, finance all the time, right? If there is a bad debt provision, provide for this. If there is an inventory slow moving stock, provide for this. If there is a, let's say, investment in an associate company or subsidiary, and if the company is not performing, provide for this. Right? And most of the staff members or the management members think that the CFO, he doesn't want to have good pictures, right? He doesn't want to show a good picture to the other investors or the others stakeholders. Not that. So as per the prudence concept, all good things, what are the good things? Income. Don't overestimate income. Right, as per the prudence, don't overestimate income. And what are the other good things? Assets. Don't overestimate assets. What are the bad things? Expenses. Don't underestimate expenses. And other bad things? Liabilities. Don't underestimate liabilities. So therefore, CFO follow this principle. This is a basic accounting principle. So that's why we provide for bad debts. Sometimes we have a company policy. If the customer doesn't pay in 2 months' time, you provide for bad debts, 50%. Right? It's prudent. It doesn't say that the customer is not going to pay. So they will pay. But as per the prudence, don't underestimate liabilities. Don't overestimate assets. Right? So if you understand these things, you can minimize the conflict between finance and the others. Right. So the components we are going to discuss, and the technical terms also we are going to discuss. Then we are going to discuss the tools and techniques. And when you analyze financial statements, we need to use different tools and techniques. Deepika is reminding me we need to stop. Right. Okay. As usual. Right. Then here we are going to discuss different ratios. We can use financial ratios, right? And the working capital management, very, very important area. Most of the companies become bankrupt due to poor working capital management, right? Working capital as well as you don't know how to finance your expansion of business. So there are good companies, right? As the SME or a medium company, very good. So suddenly you want to expand. How you expand? You use short-term borrowings, overdraft, and finance long-term projects. So that's the end of the business. Right? We call it maturity mismatch. Maturity of assets and maturity of liabilities we need to match. If you borrow 1 year, if you borrow money for 1 year, your investment, the money that you are going to use that borrowing, invest, should also, you should be able to recover it in 1 year. Otherwise, you can't repay the loan. So this is called maturity of assets and liability, right? And we are going to discuss working capital management. This is very important. And as we are running short of time, we'll discuss them a little later. Then strategy analysis and accounting analysis and forecasting. Strategy analysis, as I told you, is very important to understand. Don't just look at the history. You need to understand what kind of strategies they are using and whether they are effective. And then business valuation. The morning also I discussed the importance of business valuation. And then mergers and acquisitions also we are going to discuss, right? So these are very important things. When you merge with another company, so what's happening? How to calculate the values? As Sanjeev said, let's say a listed company is going to merge with another listed company. Can't we take the market price to calculate the share exchange ratio? No. The market value is not the fair value. Or we say the markets are having moods, bad moods, good moods, right? and therefore you need to calculate the fair value. Even if it is a listed company, to calculate the value, you need to do a share valuation. And then capital structure and dividend policy, all these the subjects are interrelated. That's why some of the things are there in financial management also here, and some of the things in the financial modeling also we are discussing here, right? And so these are the things that we are going to discuss, but detailed syllabus is there in your textbook, you can read and understand. And also interact as much as possible. Don't delay, right? So if there's a lecture, try to attend the lecture, and don't think that you can get the video and you can get it, but please try to attend and also interact. Raise questions as much as possible. A very good example is Ramsina, right? The one who spoke in the morning, shared her experience. And all the classes attended, and all the time interactions were there, and all the time video on, and we can see her face. And so therefore, it's a help for me as well as it's a help for you. And whatever the practical questions you have in your company, we can discuss, right? We have a lot of time, and we can discuss whatever the issues we have, whatever the technical terms which you don't understand, we can discuss that in the class, right? And that's all, as we are running short of time. And thank you very much, and try to get the maximum value out of this investment. Thank you. Any questions? Any questions? Right. Online, any questions? Those who are online. Any questions? Okay, then if no questions, thank you very much. And yeah, so interact in the class and try to get the maximum out of this program. Thank you. And those who are specialized in finance, like finance managers, accountants, please bear with me. First few lectures, we are discussing basic things. Don't assess from the first 2-3 lectures. This is the level of we are going to go in deep detail, right? And we are discussing advanced things. Therefore, don't just look at the first 2-3 lectures and say that this is a very basic question, right? So as there are a lot of non-finance people, and to understand the basics, we need to help them. And that's why we are going to have this, we are going to prepare a set of financial statements using field transactions, and we are going to go through an annual report. Right? All those things are done for the benefits of non-finance, but those who are specialized in finance will also interact, and your contribution is also important.